This is our Forex blog for June 25th, 2012, and today I'm unveiling our FX trade signals, which I have improved over the last month. The first one I released is the beta version, and this one's still beta because I'm going to be working on it for the next few months, trying to remove some of the false signals and find some more of the good trades that maybe our signals now miss. We have an easy three-step Forex system that I have designed for dummies. There's no way to screw this up. First of all, you look at the currency meter and you find the strong ones and the weak ones. You buy the strong versus the weak. You look for sells in the weakest versus the strong. You can also sort this from strongest to weakest. I like to look at the hourly trend. Let's put it the strongest ones on the top. The yen is trending up against 100% of other pairs over the last hour. You can also see our real-time trend strength on the top. It's extremely strong most of the day. The 15-minute trend's up. The hourly trend's up. The daily, weekly trend is also up. You know, I don't really care personally myself what the monthly trend does because it oftentimes can take, 3 days, 5 days, even a week of strong moves to switch it. Even today's explosive up move only shifted the monthly downtrend to a very slight downtrend at the end of the day. So, step one is use a currency meter, find the strongest and weak. Strongest one's the yen, then the dollar. The weakest is the Australian, and earlier today, the euro. So let's look at the euro-yen. We want to sell this, and so bringing up the chart, you can see it's underneath the hourly moving average. You can see the real-time strength or weakness of build your own trend is incredibly weak. 15-minute trends, blood red. The hourly trend is. The daily trend was down. The weekly trend shifted down around 1. And our signals tell you when to look for sells. You find a signal, and when it goes 1 pip underneath that bar's low, you sell it. You use our trailing stop to get you out, or you can use Fibonacci profit targets to get you out as well. Draw from here to here. Automatically locks on the perfect high and the low. And most of the time the market doesn't go underneath the 1.618. Now when it's this weak, sometimes it can. You might have been out of that trade and missed the remaining part of that move. And later in the day, it gave you some more sell signals here, here, and here. That one's good for about 25 pips, 25 pips, 10 pips. The first trade was about a 40 pip move. Now the euro was also weak against the dollar. And this one is also underneath the hourly moving average. And you can see the first sell signals right here. Some traders, when you get those, if they're lower probability, I have a dark red or dark green signal on here because I don't want people taking trades that have lower probability. The higher probability ones are light or bright green and red. But if you see a sell signal that's lower probability, you might want to wait for a little bit more confirmation, a little bit deeper pullback up. You can see it went up with almost no strength at all. And this is one of those trades where if I see a sell signal before and it pulls back up another 8 to 10 pips like this, goes sideways, I'm going to short it right here. But I'm also going to expect to not make as much money as it starts coming down and it goes underneath the lower bands. It wasn't even able to hit the white band the second time. I'm going to probably get out of my trade right here at 889. Short at 0.02 and made about 10 pips on that trade. So you can see some small wins later in the day. This trend really didn't continue down. Okay, so this is the Australian yen, one of the weakest pairs. The Australian's the weakest one right now, and the yen's the strongest, as you can see, even with the quote sheet that has them ranked. You got a sell signal right here, short around 59, trailing stop got you out right here at 21. You made about 40 pips. If you weren't already in that trade, one of the new entry signals I have is if a currency's significantly enough weak and you have a certain pattern like this that goes sideways, rectangle pattern, as soon as it breaks down from there, it gives you a sell signal. So if you missed the first one, you got into the second one here, made some money. Nice little pullback right here. Same kind of up, down, sideways, rectangle pattern. There's no strength. You sell it right here at 16. It goes down to 99. You made another, 14, 15 pips. And when it's this far down underneath the lower bands, I really wait for a decent enough of a pullback to give a sell signal. And there really wasn't enough of a pullback here to justify selling it. So I'm trying to create signals that have what I consider a high degree of accuracy, and therefore it may not show every single move, but the ones it does, are higher probability. you can see there was no sell signal right here. It went down a little bit. There was a sell signal here, and you can look at our momentum tools to see extreme weakness, not as much strength on the way up. It had a decent 4-bar pullback right here. When it's down this much, I want more of a pullback before looking for sells. And you can see this one right here only had like a 3-bar pullback before it continued, 2-bar pullback continued, 3-bar pullback and sideways continue. These are all trades you can take, but I want to label the trades that have the highest degree of accuracy. And notice our counter trend circles right here found the low this move, found the low here, found the low here. So if you see a currency that's this weak, you don't want to be buying the weakest currency or the second weakest currency out there, but certainly consider our counter trend buy signals as places to exit your trend trade. So if you're still short from earlier, get out right here. If you're short right here, out. Short right here, out. That definitely makes sense. So again, the 3-step plan is to use the currency meter, focus on buying and selling the strongest versus the weak. You can see the Swiss was relatively weak today. The dollar was also strong. Here's the dollar Swiss chart. Basically, you're looking for buys here. This one is a low probability buy, and that's why I label it light green like that. If you wanted to wait for the trailing stop to get in, you could have got into this trade right here at 06 and got out at the upper band because it was a lower probability, made 10 pips. Some counter trend signals right here saying it's a little bit up too much. This buy signal right here, you got to wait for it to go a pip above the high, so it never really does. If you had got into this trade, the second entry right here, when it went 1 pip above the high at 12, you put your stop underneath the low, you never really got stopped out. Got another buy signal here, it went up a little bit. This one just didn't have the intensity that some of the other pairs do, and that's why we focus on the euro yen for sells, the Australian yen for sells, because those are the ones that are most likely to move because they're the weakest ones. And when you're trading the ones that are most statistically weak, you're going to be a lot more likely to catch 20, 30, 50, and sometimes even 80, 100 pip moves, like you saw here in the Australian yen, and as you see here with the euro yen. We started selling. There's another sell here and here and here. This is what you do. You want to focus on selling the weakest ones. I'd like to end today's Forex blog by just showing our volume profile charts. This will be released this week. It's not available as of today, but maybe tomorrow or Wednesday we'll release it. You go to Add Studies, Volume Profile. I just have 5 days of tick data on here. And this shows the Euro-Yen daily chart. And it also shows the point of control, which is the area where most trading happened, the biggest, longest line. And then the value area where about 68% of the activity happened. So you can see with the Euro-Yen, the value area low was at 173. The low of the bar is at 135. So it's, about 35, 38 pips above the low. When the value area gets broken, typically that's the area where you can start to aggressively sell. A lot of traders wait for the low of the day to get broken before they start selling. Now today was a big trend day, so if you sold the lows, you had a lot of potential pips, 100 pips more. But most days the market, has a lot of false breakouts underneath the low, comes back in the range. If you can get short at a much more advantageous price, like right here, you're much better off. Notice also today's high really didn't go above the value area high, and once it went underneath the point of control of the previous day, you could even start looking for some sells as well. This works intraday and also on daily and weekly charts. So here's a Euro-Yen 4-hour chart. And you can see that as the price opened up on Sunday, the market fell, and the value area low was right here, and then it went down. The value area high, value area low, the point of control of the previous 4-hour period was right here. You can continue to sell until price goes above the value area. So again, using a longer time frame chart, you can see this trended down. The next time it opened here, it never went above the value area high, broke down again, continued down. This 4-hour period never went above the value area high, so you're looking for sells during that period. And now it's just only recently breaking out above the previous value area of the previous 4-hour bar. So it's only now that you could start to more safely look for counter trend buys. and during the next 4-hour period, if it goes above this value area high and the previous one, it's sat enough time at the bottom to make a decent counter trend move. You already saw earlier today the Australian yen was incredibly weak and trended down all day and spent quite a bit of time here at the bottom. Let's take a look at it on the volume profile charts to see both the daily and intraday how it looked. Here's the daily. So first of all, notice the previous few days the value area was near the high, and then on Friday the value area was in the middle of the bar. It broke down underneath the value area low here at 47. The low of the day's about 13 pips below that, and then it trended down thereafter. Let's look at it on a 4-hour chart. And this works on any time frame, by the way. But you can see it started down, and during the next period of the day it opened. It wasn't able to get above the value area. And there's a reason why the value area is so important. Notice the high of this bar, it wasn't able to get above the high here. It's very clear that it's likely to continue down, and it does. And the next period right here opened. It spent a lot of time in the middle of the value area and then broke down again. And notice the next period here opened, really spent almost no time. It certainly didn't go above the value area here or here, and then it continued trending down again. Right now the price came up, and look where the high was, 79.75, right where the value area is to the pip. It's spending its time there. So during the next 4-hour period, if it does break out over 79.75, it's likely to go up, maybe retrace 38% of this move. Now this also works on range charts and intraday charts. If you want to see this, for example, on a 30-minute chart, hit 30, enter, and you hit the minus key if you want to zoom out a little bit. You can see as this thing was trending down, and especially when you get a double bottom down here, a nice little even value area in the middle of the bar. This is called a balanced bar. Balanced bar breakouts, especially at extreme highs or lows, tend to lead to some nice counter trend moves. When it broke above this bar right here at 79.37, you could have got into this trade versus waiting. Well, it was only, in this case, only 2 pips earlier, but it was pretty clear what happened. And notice this value area right here, when it broke down underneath there, came down. The next area broke out above this value area and it trended up. So you can use the value area. It's got a lot of benefits. It pretty much tells you the trend direction. It shows you where major areas of support resistance are. And it basically lets you look inside the bar to see where most of the activity happened and what prices it occurred at. And by the way, this also works on range charts. So if you are using, let's say, a 5 pips per bar range chart, you might want to have a 10 pips per bar, slightly longer range chart to get a feel for where the activity happened. Notice the low on this, 10 pips bar right here, open, came down. A lot of activity, a lot of price changes in the middle of this. This is a very balanced bar. It led to this breakout. And notice where the value areas are. As long as the value areas are continuing to make higher highs and price does not go underneath the value areas, like you can see right here a little bit ago, it trends up. Once it broke that value area right there, you can see it, it went down a little bit more. When price goes above the value area, it tends to, start a new trend. So this is an entirely new way of trading and looking inside the bar, and it can be a wonderful complement with our existing tools. I primarily myself use it on the daily chart and 4-hour chart, but I will be making in trading quite a bit off of smaller range bar charts to see how well it works. But daily wise, it's amazing. It allows you to buy breakouts of the previous day's high and low, oftentimes 20 to 30 pips before the high and low of the day. Wherever most of the activity happened is where the real support resistance is. Once it gets above that, there's really no selling to stop it from going above the previous day's high.